On today's episode of the Cryptoverse. You know, if there's one good thing about this crypto bear market, it's that it forces us to re-examine our investing strategy to see if it is still sound. Like I said yesterday, in the boom time, everyone makes money, so your strategy doesn't even have to be that good, if you even have one in the first place. Now, I would like to assist in that process of re-evaluating your investing strategy by pointing out how you can still lose money on a profitable crypto investment. If you already know this stuff, that's fine, but I'm pretty confident this is a blind spot for some. Once I bring it into awareness, the solution will be obvious. So that is the topic I would like to cover in today's video. Again, this is a single topic video, so I'll do my best to find points to timestamp, and then I'll put them in the description. You know, during a bear market, the two most important things you can do are invest in your education and gather as much crypto as you possibly can. So I have created opportunities to do both of those things. Firstly, by creating an online school called Cryptoversity, where you can take a suite of online courses for one low monthly fee, kind of like Netflix, but for crypto investment. You can check that out down at the video description. And secondly, by earning a passive income in Bitcoin for helping me spread awareness of the online school. So that's also linked down in the video description. You can either invest in your education or you can help me spread education and generate yourself a passive income in Bitcoin. For now though, we're going to get into the video. So it sounds like a paradox, doesn't it? How on earth can you still lose money on a profitable crypto investment? The short answer is poor liquidity, or said another way, poor volume. So I came up with this idea, or for this segment, based on my lab testing. Now, my regular audience members will already know this, but I'm consistently conducting experiments in the crypto space, 99% of which I never talk about because they never go anywhere. What's the point in talking about them? However, that 1% in which I do actually discover something genuinely useful, most of that stuff ends up in the online courses, and in this case, into an episode of the Cryptoverse. Just by the way, that's why you have to pay for the online courses. I waste a lot of money on the 99% of those experiments to find the 1% that is actually golden. In this case, I was experimenting with a gold-backed Ethereum token called DigX Gold. So some of you may be already aware of this. DigX.global. It's one DGX token represents 1 gram of gold bullion that is stored in their vault in Singapore. Now, this experiment only cost me like $100 because I only bought 2 grams of gold. The point wasn't to invest in gold, the point was to test the system, and I happened to stumble across the idea for this segment, which I thought was a blind spot for many investors. And I did this, I bought the DigX Gold using the Kyber network, so I did an instant swap using their instant swap exchange. I took some Ether and turned it into DGX. However, when I was researching this thing and I was looking at all the data within the DGX ecosystem, the number that got my attention, which then led to the segment I'm talking to you about now, is the daily volume. So let's head over to CoinMarketCap for deeper insights here. So according to CoinMarketCap, the combined volume for the DGX token specifically across all exchanges is just $88,600 in the last 24 hours. So say I'd been a good boy during the boom time and I had transferred some of my value out of my Ether and my Bitcoin, say, into DigX Gold as a solid, more stable store of value. Say I'd been accumulating it and I'd got to the point where I had $100,000 of it, say. Then say the crypto market plunges, right? Creating a buying opportunity like we see now. I have a problem, right? I have $100,000 of value stored in my DigX Gold tokens, and I want to transfer that value through a pipe for a water pipe, which is only $88,000 thick. 100 grams of value just won't fit, not in a single day, right? Now it's actually worse than that because the whole pipe isn't just for me. It's shared between all the other sellers that want to sell their DGX tokens on the same day as me. So I don't get the whole 88,000. So let's look at a live example of this to really drill down onto the details. I'm going to use Ethfinex Trustless here because I can just look at the order book. So I'm going to use SpankChain just to demonstrate the order books here. SpankChain is listed on other exchanges, but again, I'm demonstrating principles here. I'm not talking specifically about the Digix Gold token or SpankChain. I'm talking about the criteria, like the investing principles, and re-examining our investing strategy, and just using these two assets to demonstrate the principles. So say I had 100 grand's worth of SpankChain tokens and I wanted to sell them. I have a problem here because we see that the volume is just $752 in the last 24 hours. And even then, that will not all have been traded at the spot price. This is key. These are key details. So the spot price, if you look at the top here, the spot price is like 2 cents, right? And that's just a snapshot. It's usually the last trade that went through. That's where the price comes from, if you like. It was the last time a trade actually went through. But if we look on the order books, I see down here, if I want to sell right now, the best price on the buy side of the order book someone's willing to give me is 0.016. So it's 1.6 cents. So it's not even the spot price. The spot price is 2 cents, and the highest buy order is 1.6 cents. And they only want to buy like 5,411 tokens. So if we did 5,411 multiplied by $0.016, it's $86. So they only want to buy $86 worth of SpankChain coins. That means I have to sell my first $86 worth of tokens even lower than the spot price. Then I have to go down further and sell my next 29,000 SpankChain tokens at an even lower price, and on and on and on we go. So the next 1,000 tokens I sell cheaper and cheaper and cheaper. So while my portfolio manager, like my Blockfolio or whatever I use to track the value of my SpankChain tokens, it tells me I have $100,000 worth of SpankChain tokens. That's not true though, is it? If there isn't at least $100,000 of liquidity, then it's not true. And even then, that $100,000 of liquidity would have to be available at the spot price for me to liquidate that entire $100,000 of SpankChain at the market price. So I can't actually do that at this moment in time, can I? If it was in SpankChain, right? Or if it was even in Digix Gold, because there just isn't enough buy side there. So if I want to get out all my money right now, I might end up losing half my money, because my first lot of sales actually pushes the market price down for my next lot of sales, which pushes the price down for my next lot of sales, and so on. So my money is kind of stuck. Yes, I can release the value over time. However, the windows of opportunity in financial markets, they just don't stay open for very long, right? And once you find one of these opportunities in financial markets, that's the time for swift and decisive action. But if I invested in an asset with poor liquidity, my hands are pretty much tied. There is literally nothing I can do about it. So in conclusion then, if you are taking the opportunity during this bear market to re-examine your investing strategy, I would strongly recommend that you formally document the criteria which determines when you invest or don't invest in an asset. What criteria has to be satisfied for you to go in, right? Document it and then refer to it, because that will hold you accountable to yourself. And B, I would recommend one of the criteria that you add to that document is for the asset to have a consistent daily volume of, say, 10 times the amount that you intend to invest, because that's preparation for the day when you want to get out, and you want to get out at the market price. Then you need to keep an eye on the volume number, right? Just in case it starts to trend downwards. What you don't want to do is satisfy the criteria, say I want to invest $1,000 and the daily volume is 100 grand, so that's plenty by comparison to the position size. But then the day you come to sell, the volume is like $50 a day. Problem, right? So based on what we've covered today, a downtrend in volume may be reason enough on its own to exit an investment, or at least start reducing the size of your position in relation to the current level of liquidity, just in case that window of opportunity comes and you want to sell quickly. But that is all I've got for you today. If you liked this episode, go ahead, hit the like button. And if you really liked it, hit that subscribe button. And if you would like to get rid of the ads, support the production of this show, and earn cryptocurrency rewards on a daily basis, please check out the website, thecryptoverse.show. Once you're there, click on that big blue button that says Get Paid to Watch. It also could be Get Paid to Listen if you are a member. And then it will tell you how to get rid of the ads, support the show, and earn cryptocurrency rewards for watching or listening to the show. Other than that, I will be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.